Welcome to Dad's DeFi space. I'm grateful that you're here, but let's get right to it. Bear markets don't destroy portfolios, but they do destroy our discipline. They expose who in this space is actually operating and who is actually gambling. Look, if you can't handle this phase of the market cycle, really, you don't deserve the expansion that's going to occur next bull run. Let that sink in for just a minute. And please understand that right now, this is the phase of the market that separates the tourist from the operators. So please understand that a bear market isn't just about red candles. It's boredom, it's doubt, it's watching all the other people leave when the market is going down and down and down. And you're thinking, why am I here? Am I crazy? Thing is, the bear market is full of lower highs and lower lows, failed breakouts, relief rallies that eventually fade. And right now, Bitcoin's back above 69K, but it probably is not going to last. We are still in a macro bearish trend. The thing is, you'll notice that the structure will shift before sentiment does. And in a bear market, the disciplines survive before the crowd returns. That's where the big gains come from. So, look, this is where you lean in. The hardest part isn't losing money in the market. The hardest part is sitting in the uncertainty of the market. It's not the large capitulation events that destroy people's portfolios. It's that time-based capitulation that lasts forever. So don't be checking the charts too often. Don't be looking for reassurance on X because it is a war zone over on crypto Twitter. Don't second guess your theses. They are probably correct. Don't second guess if you've done the research. These are the times you're not going to get immediate clarity in the market. You're only going to get what the market decides to give you. Bear markets will test your patience and they will test it more than your intelligence. And sometimes even the most intelligence are the ones that are having the hardest time in the market. So, what is the solution? You stay the course, but staying the course does not mean ignoring market structure. It means adapting without panicking. If you need to reduce size and that's how you feel, then reduce the size of your position, not financial advice, of course. Increase your stablecoin allocation if you're bearish. Focus on that weekly structure, accumulate high conviction plays on the dips. That's not a moon mode. That's called survival. Stop chasing micro volatility in the market and trying to get the gains quickly. Take your time, make a plan. Look, traders will try to win every single move. Operators, though, they manage the cycle. People without a plan, they will overreact to a 5% move. It's like a rookie trader. They will need, they're the ones that let their emotions control the game. They have an emotional attachment to their money, to their positions, and to their own ego. But an operator will think in months and quarters and years. They wait for the confirmation. They protect their capital first. That's how you survive in a bear market. You don't chase, and that's powerful. So here's the part that most people miss. Bear markets, they don't go straight down. They're going to go up and down. There's always relief rallies, and we may be in one right now. Who knows? But likewise, there's also going to be short squeezes, sentiment resets, and hey, the bottom's already in narratives, which has already occurred. But let me tell you something. Last bear market cycle, it wasn't over till just about everybody in this space was screaming it's going to zero. And then it ended. So, rally during a bear market doesn't mean you are wrong. It means the market needed some liquidity. So, the question isn't, is the market bouncing? The question is, has it structurally changed? Are we bullish or are we bearish? And in my humble opinion, we're obviously bearish right now. So, cash during a time period like this is not weakness, it's patience, not fear. Look, smaller size is not defeat in a market like this. I have almost 40% sitting either in stables or Bitcoin right now. If I count Bitcoin, we're looking at 80 or 90%. I do not have a lot of altcoins right now, except some creator coins on base and some Arrow. If you're in doubt of the market or of your conviction, slow down, zoom out. Crypto runs in cycles, and every cycle, whether it's bullish or bearish, it feels permanent. Like you're inside of it and it's never going to end. But the bear at the same time, just like the bull, it'll feel endless. Bull will feel unstoppable. But the thing is, structure moves first. Watch the volume. Have a plan. The sentiment will follow that. Then everyone tries to find headlines to answer that question. So you stay in the course means don't abandon your process, no revenge trading, not letting volatility change your identity as an investor or a trader. Don't chase every narrative. And it means trust the structure and your plan over all the noise. The next expansion is going to come. I promise. Well, I can't promise, but I believe an expansion is coming. It always does. But most people are not going to be positioned for it and they're going to FOMO because they burn themselves trying to force that transition too early. So you don't need to be aggressive. You just need to be intact. But remember, bear markets, they build real operators, they force discipline, and they sharpen the process. They will expose the weak. They will, and if you truly stay the course and have a plan, you don't just survive, you compound. You can win at this game. So, process over emotion, structure over narrative. And I'm going to see you in our next breakdown. If you're interested in learning more, check out our links in the description. Join the free Telegram. Follow me on X. Check us out over on Base, Farcaster, and Zora. And until next time, ladies and gentlemen, peace.